Good morning. I'm Bren Cuney, Manager of Member Services for the Ohio Restaurant Association. It is my pleasure to welcome you to this free restaurant education series, Save Money by Controlling Unemployment Tax Rates. Before we get started, I want to review a few housekeeping items and let you know how you can participate in today's webinar. During the webinar, you may type in questions for the presenter, and at the end of the webinar, I will pose those questions. I've also received some questions ahead of time, and those will be the first ones we ask. First, for those who haven't been on a webinar before, let's orient ourselves. We are looking at an example of the GoToWebinar attendee interface, which is made up of two parts. The viewer window on the left, which allows you to see everything we will share on our screen, and the control panel at the right. Within that control panel is how you can participate in today's event. So let's look at that. By clicking the orange arrow, you can open and close your control panel. From the View menu, you can also set the control panel not to auto-hide when inactive if you prefer to always keep it open. The audio pane provides audio information. By default, you have joined the webinar via mic and speakers. Click the audio setup to select your computer speaker or headset devices. Or, if you prefer, you can join the audio via telephone by selecting Use Telephone, and the dial-in information will be displayed, including an audio PIN, which you must enter. During and at the end of the presentation, you have the ability to send questions through the Questions pane. Simply type in your question and click Send. Now I'd like to introduce our speaker for today's webinar, Kammy Staton. Kammy is an unemployment manager with CareWorks Consultants Incorporated in Dublin, Ohio. As many of you know, CCI is our third-party administrator for our workers' compensation group rating plan. Kammy has 29 years of unemployment third-party administration experience, including program implementation, claims management, training in the different roles of hearing representative, account executive, and benefit charge auditor. Her experience has benefited a wide range of employers, including many small business owners, and specifically those in the restaurant industry. Kammy, we can't see your screen.
No, you can't. I just know. Can you now?
Here. No, we cannot.
Okay, just a second here.
There we can now.
Oh, okay. I was going to say I don't know how to fix it. Okay. Well, welcome everyone. Thank you very much. Bryn, you want me to go ahead and start?
Yes, I do.
Okay, great. Well, I'm Kammy Meyer, or excuse me, Kammy Staton. I've been married not too long. And I will be reviewing unemployment topics with you today. The main thing we're going to just cover is, first off, the rising cost of unemployment. As Bren described, we are a third-party administrator, not only to help with workers' comp, but we have a strong team here for unemployment cost control as well. And I want to leave you today with quite a few tips on how you can control your unemployment expenses. We partner with the RA to provide these services for you, and Bryn gave you a little bit of background about myself, but overall our team has on average 15 years of unemployment experience helping employers not only in Ohio but nationwide. Just real quick about our program, what we call our full service program, and what that covers. We would provide claims management, so we want to help you with all of the unemployment documents. If you're familiar with those documents, the Ohio Department of Job and Family Services, they get a little paper happy and they send out lots of forms just on one claim. We would receive those documents and control those for you, be in contact with you as soon as we get them so that we can start proceeding with the claim. We file additional appeals on claims if necessary, or often a claimant will challenge you through the appeal process. So we'll be handling that and just keeping you informed each step of the way. Benefit charge auditing, a very important part of unemployment claims management. I'm going to tell you a little bit more about that in a minute and how that does impact you. Hearing preparation and representation. Some claims, unfortunately, do end up in an unemployment hearing. Again, sometimes the employer is requesting the hearing, and often we find the claimants, they don't want to give up either, and they're going to try to get their unemployment and challenge you to a hearing. So we, at the hearing level, get everyone involved that needs to be prepped and ready. We like to go through a little exercise so that you know what kind of questions a hearing officer will most likely be asking during the hearing. And then under our program, we can also represent you during the hearing. Tax rate analysis in Ohio, and you'll hear me speak again primarily, of course, speak of Ohio, but most states run very similar, and we can help with those as well. But Ohio is one of the states that at the end of the year, or I should say November, they give you a chance when they send you your annual tax rate notice, an opportunity to, as we call it, buy down your unemployment tax rate for the next year. We'd like to take a look at that and see if that's really even in your best interest to do so. So we help with that. And then if you own more than one business, it can be any type of business, Ohio is one of the states that have what they call common rating, and they will allow a business owner that owns more than one business, more than one account number basically, to join those accounts together just for unemployment tax purposes to try to lower your rate. So if that's something that you're interested in considering, we can help you with that decision. Sometimes it's benefit, sometimes it is can be very beneficial and save you quite a bit of money to get a common rate. Also under our program, review of disciplinary issues, and what this really is all about. If you're having any employment difficulties with a particular person, it's possible that you're considering termination and you just are not sure what may happen with the unemployment claim, and ideally you want to win the claim, give us a call. Let us know what's going on. We're going to help advise you based on what we know the Ohio Department of Job and Family Services is going to be looking for, and give you a good understanding on whether or not we think you would win the claim or if you would be struggling with it quite a bit. So let us know what's going on. We're here to help you with that, since of course we deal with ODJFS all the time. Under the full service program, we'll be issuing you a report back, whatever frequency you want it on. Ideally, it's usually quarterly, to give you an idea overall of your claim activity. You're going to know about it, though, at the time of the claim, but the report is just a nice snapshot of what's going on. Maybe also help you look at to see if you've lost a few, let's say, attendance issues, and some things need to be improved in that area. So again, just a nice snapshot. And then we do workshops. We're happy to come to your location and talk to your supervisors and managers, whoever play a role in disciplinary issues, documentation, things along those lines. We like for them to understand what their responsibilities in that are to help your overall success in winning claims and keeping your unemployment tax rate down. It's kind of surprising. A lot of people think that unemployment taxes are, not employer funded, but unfortunately the employers in this state, they do pay the unemployment, so it's not something just that the state covers through some other tax. Unemployment tax rates, the reason why we certainly believe that it's one business expense that you can work towards controlling is because of the wide range. You could be as low as a 0.3% or as high as an 8.5%. So that, again, big variance there. You pay that on the first $9,000 of everyone's payroll. So, of course, being at that higher rate can certainly cost you a lot more money. When you do pay your unemployment taxes quarterly, that money is going under your account number. The majority of it goes under your account. A very small amount goes to what's called a mutualized account, and I'll explain to you in a little bit what that money is used for. But basically, most of it goes under your number, except that small amount that goes to the mutualized fund and basically in the hands of ODJFS. As I mentioned, first $9,000 on everyone's payroll, you pay that unemployment tax. Try to not be late on those quarterly tax returns. They will put you at a penalty rate, which for 2014 is a 10.6%. Taxable wage base, the $9,000, it can change from year to year. It's been $9,000 since the year 2000 in Ohio. The reason I mention that, some states go quite a bit higher than $9,000. Currently, the highest state is almost at a $40,000 per employee payroll, which is huge. But I just wanted to mention it because Ohio has certainly had discussions of increasing their taxable wage base, which of course would be quite costly for everyone. But you might just kind of put it in the back of your mind there that it's been $9,000 since, well, since for the last 14 years. So there's a good possibility it could rise. So unemployment taxes, basically how they're figured, ODJFS is going to look to see how much you've put into your account. They do this after June 30th of each year. So come July 1, they're taking a look at what you put into your account, what's the balance now, how much unemployment was pulled out of your account, what's the size of your payroll, and they use those factors to determine where you fall on their tax table, which then determines what your unemployment tax rate will be for the following year. So controlling those costs coming out of your account obviously puts you in better position on their tax table and ultimately will keep your rate lower or at least maintain at a low level if you're already at a fairly low rate. So one claim can definitely raise your unemployment tax rate. You'll see there on the slide just one study that we recently did. One claim could cost you $14,664 if someone would draw 26 weeks of unemployment at a maximum weekly benefit amount. For 2014, a maximum weekly benefit amount is $564 a week for someone that has 3 or more dependents. So you multiply that by 26 weeks, that's where the $14,664. So one claim, in this particular example, the employer won their claim, and with them winning their claim, they prevented their tax rate from going up. If it would have went up, it would have been almost an additional $4,000 in more unemployment taxes they would have had to pay to ODJFS the following year. This little study, it's what we call a claim impact study. A lot of our customers, they want to have an idea of what a particular claim may cost them if they would decide not to fight it, or they're trying to decide if to take it to a hearing. So we can run that study and determine what kind of an impact it would have. A lot of it depends on how long the individual has been with you and how much you've already got in your unemployment account. But again, we can run those studies, which helps the decision-making process sometimes. You can stay liable 2 years in a row on an unemployment claim, again, depending on the length of employment that person has, how long they've been with you. You hear a lot about extended benefits. Just want to mention that those are not charged to your state account. So even if an individual stays on extended benefits, you won't be charged for those. Okay, so building your account up and avoiding costs coming out of it is the best way that you can try to control your unemployment tax rate. Avoid paying on the claims that you don't believe should be, that claims should be warranted. A lot of times you might not be happy with the first decision that you're getting out of that local processing center level, so we encourage you to continue the appeal process or give us a call. We can just at least talk about it and let you know whether or not we think you'll see a different decision at a different level. So basically don't give up, follow the appeal process if you're not happy with it, and then also always watch each month when you're getting your monthly charge statement from ODJFS. If you're familiar with that, anytime someone's actually drawing off of your account, they're going to send you a monthly statement. Make sure you take a look at that statement. If, for example, if you're due credits back on a particular claim, make sure that that statement shows those credits. It's very important. We catch a lot of errors. Either credits aren't being given back or there could be some overcharging. So watch those monthly statements, whether we're doing it for you or if you're doing it. We strongly encourage you to keep an eye on those. One reason, improper payment rate. What that's all about, each year the Labor Department conducts a study on every state to see how they are doing in their unemployment program, and Ohio currently has a 14.13% improper payment rate. Now there's a lot of different things that make up that number, but the main thing is just making sure that you know that errors can be made, and it's up to you to watch your account and make sure that you're not being charged on claims that you've won, or again, I mentioned credits, make sure you're getting the credits back. There's only 5 states that have a higher improper payment rate than Ohio, so again, just keep an eye on that, because overall that can be driving your unemployment tax rate up higher than it should be. Few things there. Again, keep a watch on your charges, watch for credits, file timely protests through the hearing level if necessary. Again, every document for unemployment is time sensitive, so pay very close attention to your deadline dates. If they rule you untimely, it is almost impossible to get that reversed. So very important to stay timely on everything. Provide information to ODJFS at the initial level. That right there is a key to your success. I'm going to talk about that more here in just a second. And then work refusals. If you're needing to call somebody back, maybe they had a couple of weeks off, your business might have just been that slow, and now you're ready to bring them back to work and they're refusing. Absolutely, it's important to report that to the Ohio Department of Job and Family Services if they're collecting unemployment. There ideally is a certain process that needs to be followed with that, and we can go over that with you if you want to give me a call at any time if you have that kind of a situation. What ties into that improper payment rate, the Labor Department again says that every state needs to be improving with this. So they have implemented new laws that went into effect last year. This impacts everyone, every state. And what it's saying, it's new penalties basically that all employers, there's claimant penalties and employer penalties, but we're going to only talk about the employer penalties today. So what the new employer penalties are all about, it is telling the employers that if you do not file your information when you get a claim form and you're trying to protest the claim, you don't provide adequate, and it's just based on what ODJFS considers to be adequate, but adequate and timely information at the initial level to basically, the way ODJFS describes it, give them the opportunity to make the correct decision initially. What will happen if you are actually penalized for a claim and penalized throughout the remainder of the calendar year, then on future claims, if a claimant is first awarded benefits and starts drawing, and then at one of the appeal levels it's reversed and put in your favor, then ODJFS sets up overpayments for the claimant to pay ODJFS back. Currently, even if they don't pay ODJFS back, if the claimant doesn't pay back, those overpayments that was pulled out of your account, ODJFS will put them back into your account. But now they're saying under the new penalties, you will not get your overpayments back. So more money obviously can be pulled out of your account that should not be. So you want to, again, supply that information if you're trying to protest the unemployment claim initially to get that ruled in your favor to prevent any of these overpayments that you'll no longer be credited for if you're classified as a penalty. They're basically saying that if you show a pattern of failing to adequately and timely respond to ODJFS, and you do this 3 or more instances during a calendar year, then throughout the remainder of that calendar year, you will be penalized and not get overpayments back. Okay, so after the 3rd instance, this could happen. If you've been penalized, they will send you a determination. It'll look just like the current determinations, but this one will read simply that you've been penalized on the claim. You have appeal rights if you want to challenge the state on that, but you've been penalized, and you basically, after 3 of those during a calendar year, that's when you're risking your overpayments. So it's something very new. If you have any questions on this at any point in time, just give me a call, because again, it's very new and employers are just now starting to see it happen. It did go in effect in October, but I think they really waited until the 1st of the year to start implementing the new penalties, but it's definitely happening. What this is saying, it's raising the bar for the employers to make sure that they are compliant with ODJFS in their claim responses. You know, what they're trying to avoid, and you know, some employers are guilty of this, that at the initial level, either you just didn't have time to deal with it, you didn't gather all your facts, now you get the determination, there's even a redetermination, and then at some point you decide to start supplying all the information. During that time, the claimant's been drawing benefits, and that's ideally what shouldn't happen. So they're trying to avoid people starting to draw, overpayments having to be set up, and if they feel that the employer caused this problem, that's when they're saying you're not going to get these overpayments back. Okay, so kind of enough on that, but certainly call me if you have any questions on that. So really kind of keeping it simple, some of the ways that you can reduce the cost. First off, understand how ODJFS applies their charges to employer, and I'm going to go over that here in just a minute. Understand what they are looking for from an employer to allow or deny the claim. And then, of course, I'd like for you to understand some different ways that we can help you out. Okay, so who can be charged on a claim? You might know this if you're very familiar with the unemployment claim process, but if you're not, it can seem somewhat confusing. Basically, Ohio and most states, but Ohio definitely have what they call the base period charge method. And what this means is that when someone files a claim, there are 2 different types of employers in every claim. There is the most recent employer that this person is filing against and they just left. But then there are also the employers that this person worked for over the past year and a half. So when someone files a claim right now, ODJFS, they go back 5 completed calendar quarters, and they pull in all those employers that reported payroll on that person in their base period. Right now, the current base period is October 1st, 2012 through September 30th, 2013. So if someone files a claim today, then those employers that reported payroll on that person during that time period will also get a claim on that person, and they have protest rights and they need to respond. So it takes a while to get out of the picture on someone's unemployment claim. So that's the current base period, and that will be the same base period if they file now or through the first week of April of this year. So the claimant, when they file, they're asked to list out their different base period employers, but even if they only worked for you a few days and they forgot even to list you, they search through that claimant's Social Security number, and they'll pull in all employers that reported payroll on them, regardless if the claimant lists you or intends to involve you. It's ODJFS that's really involving you in those base period claims. So they look at all the employers that made up the base period, and they divide out the liability, which is the potential charges, amongst all those base period employers. So again, if you're familiar with the unemployment documents, it's a determination that you'll receive. You might see other employers also listed on it, but it's going to show your account and what your percentage of liability is. And if that person quit you or was discharged, then you do need to respond back to that form, and you have 21 days to do so and indicate the reason that they left your business, and you should request in writing to ODJFS that you're in disagreement with your account being charged. You're basically requesting relief of charges on that claim. Okay. If for some reason you discharged the individual and you didn't win the claim when they first filed against you, then you don't have protest rights when you later fall into their base period. Or if the job happened to end in just you didn't have enough work, then you don't have protest rights. But on the majority of those types of base period claims, you have protest rights, and I strongly encourage you to respond back to ODJFS on those. Now, the decision to allow or deny that person's claim, they focus on the last employer, what happened. So we get, some companies will give us a call and they'll say, I just don't want to impact their unemployment. They left me several months ago, but I know they've been laid off somewhere. I don't want to see them not be able to draw benefits. That's actually, not correct. You aren't trying to stop their benefits. You're just trying to get your account relieved of the liability if you're one of those base period employers. So you're just focusing on your account at that time. If the claimant still draws unemployment and you've been relieved of your liability, when we were talking a little bit about the tax side of things, and I talked about that mutualized account, that a very small percentage of every Ohio employer's dollars go into that account, then that account is now used to pay to claimants that are drawing benefits, but the base period employers have been relieved of the liability. So that's what that money is used for. Due to the base period method and how long it takes you to get out of the picture, we recommend that you always retain your employee records up to 3 years from the separation date. By then, you will be completely out of someone's base period, and never assume that someone won't file for unemployment. I'm sure that you do have a lot of individuals that either leave for other employment or they just stopped showing up, whatever it may be. Don't think that that's going to be the end of it. They can go on to another job, and a year later they're filing for unemployment against that employer, and you're going to fall into the base period. So hold on to those records. Okay, excuse me. Okay, and what is ODJFS looking for in a claim? Primarily, to ODJFS, there's 3 classifications. There's a lack of work, and generally those should be allowed claims. The individual is out of work through no fault of their own, or someone has quit, and the burden of proof then should fall onto the claimant to convince ODJFS why things were so horrible and they had to quit, or a discharge, and then that's when the burden of proof will fall solely onto the employer. Okay, we'll first cover the easier one, lack of work. Someone, if they are going to draw unemployment due to lack of work, or really if the state decides they're going to get the unemployment, in order to draw, they still have some additional requirements. First off, they must be able, available, and actively seeking work. I'm sure all of us agree that it's not difficult to just indicate that you're seeking work. Excuse me, but it is a requirement that they have to show. But they also have a monetary qualification. And what this is, back to that base period again, the state has to find 20 weeks of wages with an average weekly wage of $233. Wait just a second, I'm sorry, I need to take a drink of water. Oh, sorry about that. Okay. Anyway, there has to be enough tax money that's been paid in on that individual, and that's where they're looking for those 20 weeks with an average weekly wage of $233. You might not even be in that base period at this time. You could fall into the base period later, but they have to have that qualification through one or more employer. Again, might not be you. Another type of lack of work, and we see it all the time, part-time employees. There are situations that they can collect partial unemployment benefits. So kind of real quick how that works, if let's say the state says that you're able to draw $300 a week in unemployment, and that generally works out to be about 50% of what they were averaging in their base period. But if they, in the base period, was making $600 a week, now they are not making that amount of money, they're less than $300 a week, then they can pick up the difference in unemployment. So that's where partial unemployment payments can be paid out to individuals that file. Another type of lack of work, if you know that you're just going to need someone for a short period of time, maybe just right during your peak season, so you hire someone, you tell them that it's just a temporary job, so they know that when they accept the position. Once the job ends and they file for unemployment, even though you did let them know that it was temporary, ODJFS is still going to classify it as a lack of work, and if they have enough base period wages through another employer, they could still qualify. On the voluntary quit issues, the majority of quits, they should be denied claims. If you aren't having a success on your quit issues, then there's definitely some different things that you could be doing in order to win those claims, because the majority should be denied claims. But the biggest part is, don't believe that the claimant is going to tell ODJFS all the correct details. So it is absolutely important for the employers to respond to all of those voluntary quit issues and give the facts, so that the state isn't just relying on the claimant. Anytime possible, of course, get a resignation letter from someone. I know that's hard a lot of times, or they just simply never return back to work, but again, if possible, get some type of, any kind of little note of any sort that they will jot down for you, and I ask them to also put the last day of work that they plan to work through, have that noted on the resignation note. One reason why that is very important, and maybe one of the best tips I can leave you with today, is it is very important that you allow an individual to work out their notice, or you pay them out the duration of that notice. If you don't, if you decide that, I just don't want them here anymore, I think that they're just going to create morale problems, whatever it may be, that is certainly okay. But we highly recommend that you allow them to at least work out their notice, whatever they told you their last day of work was going to be. If you don't, and they file for unemployment against you, then ODJFS is going to immediately treat it as a discharge, because they're going to look at it as the employer ended the employment. They put that individual out of work and out of a paycheck sooner than they were expecting. So it's a discharge, and those, of course, are going to be, those claims are going to be very hard for you to win, because your intention was not to discharge them. So you don't have, like, prior documentation or just be able to talk about problems. It was simply that you just didn't want them to work out their notice. So it can cost you a lot less to just pay them out their notice versus paying an unemployment claim. If they would be allowed the benefits and start drawing, they can draw the full claim, which is 26 weeks, not just like the duration of the notice. So we tell as many employers as we can this information, but unfortunately it's always sometimes after the fact that we're telling them that's why they lost their claim. So keep that in mind. Allow them to work out the notice or pay them out the notice.